Okay, this is the Bitcoin panel. Just wanted to see if you were paying attention, but it's the end of the day. I know we're running behind on time, so we'll try to go a little quicker. With us today, we've got Corinne Trong. Did I say that correctly? Always. Okay, the founder and CEO of Careva Capital. Is that correct? Okay, great. We've got Eugene Wang, who's the managing partner at Olympus Partners. We've got Christina Chang, who is MD at Citi Global Markets. That's correct. And Wei Li Chen, who is head of commercial ABS at Standard Chartered. So thank you all, and thank you, Paul, for doing this. It's good to be back out for once in a long time. Eugene, I would like to start with you, if that's okay. This panel is going to be about yield. It's going to be about investors, returns, what people are looking for, and what's happening in markets. Eugene, you advise, you give financial advice, I think, to all kinds of institutions, not specific to aviation. So just from your perspective, I mean, how are investors balancing sort of the risks and rewards of aviation at a moment like this?
I think they're very concerned about the residual.
I'm not sure if your mic is.
So I think they're concerned about the residual value risk, the value of the aircraft. I think they are they're comfortable, I think, with the credit. But they just are not certain as to what aircraft are going to be worth. And they have the luxury, like a lot of our investors have the luxury of investing in different asset classes. So it's a lot easier for them to process the risks associated with other types of assets like commercial property, infrastructure, energy and renewables. And they're really sitting on the sidelines when it comes to aviation. They will be back eventually once the market normalizes. So they're not out forever, but at the moment I think they're finding it very hard to get comfortable with both the current and the future values of aircraft.
So you're saying, I mean, you said to me before that residuals are more important than yield and more important than credit, lessee credit.
Yeah, correct, that's right.
Okay. I don't know if anyone has anything to add on that, or? Okay. Eugene, let me just stick with you on that. Well, actually, let's go to Christina, if we can. Christina, what kind of deals or transactions are you seeing taking place today?
Sure. So we're seeing, I mean, the bank market is still there. I think still there selectively for top tier airlines that have a clear operating strategy on a go-forward basis, and not all airlines have that. I think a lot of the US and maybe some of the European airlines are in a more advantageous position where there's more visibility on how air travel will come back and the types of volumes and routes. I think for Asia, it's a little bit more uncertain because there's such a heavy reliance on international travel, and there's little visibility on when business travel is going to come back in the same way. So I think banks are being quite selective in what new aircraft delivery financing opportunities they're pursuing, and there's a lot more tiering in terms of which airlines they'll bank. There's also been a lot of focus on restructuring work. A lot of existing financings are being heavily restructured by banks, particularly over the last year or so, and there's just a question on when will the extension stop? And when are we going to say, okay, we've got to bite the bullet and start paying? We are seeing the ABS market come back. So post-COVID, we've now seen 2 commercial aircraft ABS transactions, including one just priced a few days ago by Sky Leasing, and that was actually the lowest ever coupon achieved for an aircraft lease ABS transaction. So that was Sky. We also had priced a transaction for Castle Lake. Also a couple of engine lease ABS deals post-COVID, as well as a regional jet transaction as well. So we are seeing, almost surprisingly, investors be very active in supporting these transactions. There are certain tweaks that have been made to the transactions versus pre-COVID deals. I think one, quick takeaway to highlight is that the aircraft portfolios are much more concentrated in specific high-quality airlines. So previously you'd have, 15 to almost 20 different airlines, and there was diversification for the sake of diversification. Now everyone is quite happy with a 30% concentration to Delta or to JetBlue. So it's a very different type of portfolio now.
And when you say the lowest ever coupon that
Yeah.
that deal was, I mean, is that a reflection that we are coming out of COVID and people see it as the rearview mirror, or is it a reflection of just global interest rates?
It's primarily a reflection of rates. So that was at around 2.4% for the Class A, which was a spread of 150 basis points. So a reflection of really rates, as well as a reflection that I think, particularly in the US, there's a view that, the vaccine, or that we're seeing it's either the beginning of the end or the end of the beginning, that really you're moving into a post-vaccine world. Things are going to recover, particularly for airlines such as JetBlue or Delta and the like. And there is a visibility on the future. And there's just a lot of money to be put to invest. There's a lot of money sloshing around. And we have seen a lot of the aviation-related credits, particularly in the US, recover quite substantially. So the large lessors, the airlines, we've seen spreads come in.
And Wei Li, has the banking community had to get much more creative to get deals done?
I think, to follow up with what Christina said, I think first I want to put something in perspective, right? So after 9/11, the aviation capital market didn't really come back for 3-4 years, and when we did was with financial guarantee, like AAA guarantee to wrap the paper, because investor didn't feel comfortable with aviation credit itself. After the GFC, it took the capital market 6 years, from 2007 all the way to 2013, to come back, and then it took many years for the elevated spread to eventually come in. The deal that Christina just referred to, has a credit spread of 150 basis point on single A, and the all-time low pre-GFC was about 125, so about 25 basis point, and that was during 2018. As a matter of fact, if you look at the spread level right before COVID, the ABS deals, you're talking about 300 basis point. So I think it's a remarkable resilience and recovery, right, to come back. In terms of, yes, last year, I think the capital market and others did become very creative. I think that one of the biggest product that came out, and by the way, the U.S. aviation market was the obvious aircraft ABS did not see much action, but in terms of WTC and mileage programs supported secure transactions, you're talking about $10 billion paper was smashing record, and so the creativity, looking at the sort of the airline business model that people realize is sort of credit card and then flying people around, right? So that part was a very, very success, a big success, and I think that sort of spell over into this part of the world as well when we took at sort of the bank support or buying air miles. That is currently a very hot currency or asset. Some other things that are worth pointing out, I think, the freighter aircraft, it's all FedEx did a deal that was a very, very tight spread last year at WTC, and as well as United. So they did a spare parts. WTC deal essentially put all their mission critical spare parts into one package and sort of did secured financing. So there's definitely a lot of different activities, and both the banking community as well as the investors step up. And so last year, again, in aviation in the US was a record year.
Yeah, I think for everyone, it probably wasn't as distressed of an overall situation as you would have expected a year ago, right? Or a little more than a year ago, a year and a half ago. Corinne, I know you look at a couple of distressed situations. You're doing some more interesting freighter conversions. Can you talk a little bit about?
Yes, I think distressed values have always been like our number one concern, for all the lessors and also owners. Some assets have performed much worse than others, and we're talking about the wide bodies, older generation. And the latest figures actually show that since January 2020, the 330 or the 777 have gone down 48%, which is tremendous. So now what are the solutions? And probably the hottest topic is really freighter conversion. And we all know that the past 12 months, cargo has been kind of savior for the airline business. Take the example of Korean Air. 90% of their current revenue is generated by cargo. What is interesting to see is that 80% of this cargo has been carried by passenger aircraft. So there is a huge lack of freighters or converted freighters. So currently, what would be the cargo conversion has always been a way to give a second life to an aircraft, and also to capture the gap between the passenger aircraft value and the freighter aircraft value. That means that when an aircraft type is not a popular aircraft as a passenger, and it has a very distressed value, while as a converted freighter, it has a very high value, and then there's where we can see an opportunity. And that's probably the best business case would be on the 777. If you look at the oldest 777 production freighter, that will be a 2009 vintage. We all know, I think those who have 777 freighters know that they are still paying extremely well. We're talking about over 1 million kind of rental per month. Ascent value, 2009 777 freighter at 95. Similar vintage on the passenger front, we are talking about 42. So the gap is really there to be captured and to be converted. I think the GCAS program is really interesting with IAI, but yet it's still some time to go. We're talking about 2022 and no availability until 2024. And same situation on the 330. What is interesting to see is that 15 years ago, I remember when I was working for a French bank, and with DVB, we set up the first speculative freighter conversion farm to convert some passenger aircraft into freighters, and it was completely on a speculative basis. It was aggressive. Whereas two days, I think, basically all the strategies come from owners. I'm thinking about CDB, and other owners, which is completely also, GCAS too, which is a completely defensive approach, which is also very smart. But yet, we currently have this problem with the conversion center and the lack of...
let me ask you about that. I mean, other than GE, which is a huge lessor that's driving its own book, I mean, who's financing most of these conversions?
Well, I think conversion is extremely difficult to finance. All the bankers will say, while an aircraft is during conversion, it's not really an aircraft, nor passenger or a converted freighter. So banks do not like that. So unless you do have a lease attached at the end of the conversion with a cargo operator, and you're already the owner of the aircraft, like CDB or some others or GCAS, it's extremely difficult to finance. And I think 15 years ago, when we did the first 747-400 certification aircraft with IAI, I remember that was an aircraft with Rabobank, which was on lease with Air Atlanta as a passenger aircraft, and then we had an agreement, Rabobank had an agreement with Air Atlanta to lease it as a freighter after conversion. So although it was a certification aircraft, so with all the risks linked to it, because we were talking about alternate conversion with IAI, while Boeing had its own conversion, the whole thing was financed, and actually it was a success. And I think that's the kind of model that probably most lessors are tending towards to,
So for someone like your clients, maybe their family offices, maybe their, pensions institutions, will they look at sort of special situations, conversions, and sort of spec?
Yeah, they would. And we have talked to some private equity funds that are looking specifically for older aircraft, narrow bodies particularly, for conversion opportunities. I guess conceptually it works quite well. it's the difficulty, I guess, is everyone's chasing the same types of assets. So getting the pricing right, finding the aircraft that meets the requirements technically, but is also priced at the right level is quite difficult.
Yeah, we're also seeing clients who have this sort of strategy as well. It's just we were speaking to ST Engineering, and they have issued a press release around that they've set up a JV together with Temasek to actually set up a portfolio which would be really focused on converting older narrow-body aircraft, which are probably redundant because of COVID, and converting those into freighter aircraft. And obviously for them, they have the capabilities to actually not only to undertake and execute the conversions, as well as then to place to airlines. And then, once they're placed to airlines, that would be when they would look for financing.
Just sticking with distress for a minute, I mean, historically, if we looked at a situation like today, I think we would have all expected to see more M&A, more mergers, even more bailouts. I know we've had a lot of government support. Wei Li, from your perspective, has the industry not consolidated enough?
I think definitely is in progress, right? But in terms of the notion of distress, I think, from a capital market, a structured product perspective, again, I think the product has been pretty resilient. And the reason that, you have about $20 billion ABS paper out there, 40 some odd transactions, and you don't see, the sort of the performance of the airline industry trigger a fairly substantial liquidation, for example, is because these deals are, built with very strong liquidity. And, through COVID, that mostly held up. And as a result, the level of downgrade has been pretty modest compared to, again, what we were seeing in prior cycles. Is all of a sudden contribute to, giving these transactions, leasing company and airlines, time to work out the sort of the short-term liquidity stress. But we don't have, even though you do have sort of observed asset valuation lease rate marked fairly substantially down, but you don't really see that level of stress in the marketplace. So I think it's pretty significant and remarkable.
I mean, we've heard a couple of times today about private equity coming into the industry. Christina just mentioned it. Where do you see the impact of private equity?
I think they've always been, in the past cycles, demonstrate that they can be the sort of liquidity of last resort and being the sort of the smart money. And I continue to believe that they will continue to seek value. And I do think, from the sort of the again, capital market and the structured product perspective, the recovery has been much faster than I would have anticipated, but there are still tons of opportunities in the mezz and equities space that either represent sort of the securities value or maybe sort of portfolio play. I think I can continue to expect that may play out in the coming, let's say, couple of years.
Eugene, is it difficult for your clients to compete with private equity, or?
It is, because I think that the private equity guys are often a lot more sophisticated, frankly, than some of the other financial investors. I mean, having said that, I don't think that that always means that private equity has like a magic edge that no one else has. Recently, we acted for a private equity firm that was bidding specifically for a narrow body for conversion purposes. And we had some intelligence on where the bids were for that aircraft. And our client was bidding 20% less than somebody else for that aircraft. So I think they had a very good view of where they wanted to be based on the technical specs and all the conversion costs that they would need to put into getting that aircraft, turning that passenger aircraft into a freighter. But didn't automatically mean they had like a magic silver bullet that meant they were going to get the aircraft over and above everybody else.
I think what COVID has done to the investor space is that it's really, I think, really hit some of those financial investors who have other options around, you know, infrastructure or real estate, etc. I mean, so the likes of some of the Korean platforms, of the Japanese platforms, it's really, you know, if you're going to be an investor, you have to be an investor with significant means, willing to play the long game, and really have to have knowledge and expertise and a leasing platform in this space. I think it's very hard for just general investment firms to set up a aviation-focused team, because it's just, they're very, very difficult for one to get financing anymore. Banks used to be very sort of aggressive around providing financing. I think now the actual platform, the sponsors are incredibly important, as well as the servicer, but the sponsor and also it just means that it's not about the aircraft and the specific lease that you're financing for an investor. I think previously Japanese or Korean investors were always like, oh, this is to Qatar, this is to Singapore Airlines, no worries, let's do 100% LTV. Now it's, you know, it's quite different, because you have to think about the residual risk. And I think previously a lot of those investors are saying, oh, it's so far away, we don't need to worry. Now people realize it's not that far away.
Well, I think so. What you're saying in the leasing sector over the last 10, 15 years, we saw a lot of private money, whether it was family office money or sort of, let's call it Asian conglomerate money, move into airplane leasing as theoretically almost like a store of value. Corinne, I know you've been involved in some of that. I mean,
Yeah.
Do you expect going forward, you know, that's going to shift and leasing will go back to really being for the banks and
yeah, well, I think what's interesting to see, and I concur with Christina's point of view, is that we see increasing interest actually from family office, from real estate conglomerates here in Hong Kong, which has no experience in aviation at all, and who see aviation as a kind of distressed sector to get into. And I think it's also all of our duty to try to educate them, because they do not have any knowledge at all in this respect. I think on the freighter side, it's quite interesting to note the involvement of of all these investors like Bain into Titan, or Alibaba buying 30% of Air China cargo through Cainiao, and I think although aviation is not maybe that popular these days, cargo is definitely an extremely attractive sector for many of them. And I'm thinking also about JD, this big e-commerce platform in China. All these guys are getting into freighters. So definitely an area to look into.
Okay. We're running out of time, but we can't end without talking a little ESG. It seems you can't do anything these days without talking about ESG, so why should this be different? Wei Li and Christina, from a bank perspective, the global banks, how do they look at airplane or aviation financing from a perspective of climate change, ESG? Does it factor into what you're doing?
I think it's probably two things. One is the concept of sort of ESG investor coming into or having that as a separate either mandate or pockets of money. I think that's obviously encouraging. What we found is, especially in Asia, for some of the product that we do, you may not have outright mandate to do this product but all of a sudden if it's this ESG or sustainable label to it, or certified, then indeed there's a separate pocket of money that with a mandate, and we really, our mandate is to invest in that. Now, how does that translate into sort of from the aviation perspective? I don't have a very tangible idea. I know it has been a focus in terms of the carbon footprint of aviation, as an industry. And I think obviously, someone commented earlier that there's drive towards greater efficiency. In my mind, I don't know, can't quite formulate how that is sort of actually translating something into an outright green.
Let me ask it for the rest of you in another way, and then we'll wrap up. Does the finance community, do investors have a responsibility to push aviation into addressing climate change?
I think it's very hard. I mean, the nature of the aviation industry, it's very hard to simply convert it overnight into an ESG positive industry. But we are definitely seeing airlines and lessors and investors being very focused on, being increasingly focused on this issue. And we are seeing, like I mentioned, the ST Engineering focus on freighter conversions, and they actually see the freighter conversion initiative as being consistent with their ESG policy, because they're taking older narrow-body aircraft that would probably just be parted out and actually giving it new life, and they see that being very consistent with its ESG initiative. We've also seen, for example, the last Willis engine lease ABS transaction, which was issued, I think, a few weeks ago. They had a big section in their offering circular about what percentage of their engines are new generation engines, or engines to power the Neos or the Maxes, and what that actually means to fuel efficiency. So there's a lot more education around this. And then we're also having some brainstorming with lessors as to whether they charge certain adjustable lease rates depending on the emissions policy of the relevant airline. And there are things to think about, but obviously this will take time.
Eugene, is it a factor for your clients?
It is, particularly the institutional clients. They all have ESG policies, and in fact, it's now impossible for us to show them, for example, a coal-related project. They just won't do it. As it pertains to aviation, I think they're going to be more reactive. It isn't a discussion point that we've had with any of our investors, which isn't to say, as I say, they've got the policies and they have put them into practice in other contexts, but I think that it will become relevant to them when it sort of becomes relevant to everybody. I don't think they're going to be leaders in this, but as it becomes a more important issue for the entire industry, they will react to it.
Corinne, you've got the last word.
Yes, last word for me. Thanks. No, I think pre-COVID, ESG was really one of the main concerns for the aviation community, and probably we haven't done enough in this respect, and that was not helping us much in terms of image, etc. But I think at the end we'll be all driven by the market, by the stock market, for example, where we see all the stock of very high ESG companies going up, and at the end of the day, I think we'll all come to it.
Okay, thank you all very much. Paul, thank you again, and I think that's it.